Hi and welcome to the Market Alert for Tuesday, the 8th of March 2022. There's a lot to get through today. The news, and there's two themes in the news. One's energy, one's the market's breaking, and we kick off with carnage everywhere as market begins to break. This may just be the beginning. It is, that's for certain. Nomura stuff is beginning to break, from energy to ags to industrial metals to inflation to EU financials. On the cusp of an economic singularity, a big bang is coming, a brace for impact, and panic both ways in a broken market. Crazy moves everywhere that you actually look. Market is totally dysfunctional. Traders concerned Russian CDS won't pay out in the event of default. The problem we face with CDS is implying a recovery value that's not realistic. And then we move on to energy. Russia says global oil embargo could push prices over $300. Absolutely. European natural gas jumps 64% as a chance of Russian energy ban ignites mayhem. I'll show you that in a minute. Have a look at UK. Well, here it is. Wholesale gas prices up yesterday. Year on year, that is. Year on year, 1,500%. That was yesterday when it hit a high. And you can see that if you want to keep an eye on that during the day. You can see it here under trading economics. Let me just move this lower so you can see the actual website there. So you've got trading economics, commodity / natural gas. That's the UK there. You can see the impact. It's not open yet. This is the close of yesterday. And if we just move down here, you will see what this is all about. This is where your gas comes from. This is the futures market where it's hedged by the gas companies. And you can see there how much the high and low. At one point it was 0.11 per therm, and the highest is £800 per therm. So there you go. That's a massive yesterday. Absolutely massive. I couldn't believe it when I found this chart. And then you actually you can see yesterday the 800 there. If you go back to the screenshots, yeah, there it is. It was up yesterday, 203. It's not showing on that chart, but it is there. I mean, you just again you can see it. Whoops, you can see it there. But yeah, 1,500% increase, and there's already a 50% increase going on to people's bills in April, and another 50% in October. Talk about timing. What with food. I've left all of the food news items out that we've got here because of the embargoes and sanctions, because a lot of wheat comes from Russia. It's as if the whole thing is being engineered to create the hyperinflation that they want. And if you actually look at this, well, I wasn't going to cover this, but I will. Let me just grab this. All right, if you want to have a look at this, it's all detailed in this document here from the IMF. This goes back to 2015, the liquidation of government debt. As anybody who's been following the channel for a long time knows, I've been talking about this since 2011. And the page you want to read in here is the introduction. It is absolutely brilliant. It tells you everything that they intend to do, how to get out of the actual debt situation. And they talk about here, if we just go to the next page, like I say, I'm not going to read all of it. Restructuring, forcible debt conversion, as well as hyperinflation as debt reduction mechanisms. And if you go back to market alerts over the last year, when inflation started after the end of the COVID lockdowns, where there was a supply issue, and Powell said that the inflation that we were seeing at the time was transitory, and I said it's not, and it never will be, because Powell had said prior to this, in the April of last year, that the only way out of the debt was to hyperinflate, and now you're actually seeing it. But this document, I tell you what, it makes for some very, very interesting reading. And this talks about debt before the war and how they actually reduced it through inflation and hyperinflation, and how any country that's got a GDP debt ratio, how it doesn't work because you actually get low growth, etc. But the one thing that was quite funny. Well, it isn't funny actually, but it was. Let's have a look. Yeah, this one here. Let me just see if I can increase the size. Yeah, some people will think that 2 3/4 non-marketable bond is a trick issue. We want to meet that head on. It is. It is an attempt to lock up as much as possible of longer term issues. Look, they just tell you exactly. It is a trick. And then, like I say, read the rest of it and you'll see why this is just playing straight into their hands with all of the hyperinflation and $300 dollars per barrel potentially, etc. Plays right into the hands of all the central banks to get the hyperinflation that is required to reduce the debt. And it just goes on and tells you exactly how they'll actually do this. So well worth a read. I'll put the link in the description for the videos and in the emails as well. And the same with the gas one if you want to keep an eye on that as well, so you get an idea of what's coming down the line as far as prices are concerned. Anyway, let's get on and have a look at the markets. But before we do that, actually, let's just have a quick look, see if there is any economic news today. There isn't any. And just a reminder, I've added some more live trades. There's one yesterday showing how 179 points profit was made yesterday over 11 trades. Then there's the other ones about the silver price that from the weekend, and also the DAX profits for the week as well, and then the week before as well. We've got a silver update before last week's activity as well. So plenty coming down the line. There's not enough hours in the day at the moment to keep up with everything that's going on, but as I do it, I will put it onto the site for you. Okay, look, let's get on with having a look at the markets. Dow daily overnight trading down at 89% at the moment in the daily chart. We've actually broken out of that sideways move that we had. We had that sideways move. It's now moving down 89%. It needs to take out the low, and then we switch to the weekly chart where you'll see that we've got a 78% retracement in there and real support as well. So we've gone through that one. Let me just draw in this real support for those that trade the Dow, so you can see what the number is. So you're looking at 32,050 really is going to be the psychological level. So there you go. Well, in fact, you've got 31,952 as well, which is just over 100 points lower. So yeah, let's see how that gets on. Last week you can see a lot of volume holding the Dow for the week, but this week it's had to let it go, and it's starting to move down quite sharply there. Yesterday Dow opened DP overbought and selling inside of the green bar there. We got an upthrust with selling in it, and then off we went to the downside, and at the moment you can see that we've moved sharply to the downside as well. In fact, we've had quite a fair old move to the downside on the overnight, haven't we? This is going to be the high for the overnight, and the low there 564, so quite a big move, but bouncing at the moment as we're oversold and finding support at the S1, trying to get back to the low. So again, watch for the low of these markets, because when it's being taken out at the moment, the market tries to get back and then continues lower. In the DAX, again, you can see now we're sort of cascading to the downside. We have some demand for yesterday and we're over sold. It's been a while since the market's closed above the previous day's high and held it. In fact, since this bar here, what we've got 1, 2, 3, 4, 5, 6 days straight now where the market's failed to even close above the high of the previous day. Again, in the 30-minute chart for the DAX, we had a good move to the upside yesterday morning, trading to the previous day's close. We managed to get through the low, but we became overbought, and the market moving down with the Dow. We're already oversold here yesterday morning, and then turning green, and the market moving to the upside. Currently we're at yesterday's, or heading towards yesterday's low there, and just bouncing off that 89% retracement there at the moment. Close is above, and obviously the DP and the 50 EMA will be an issue for this market as prices approach this earlier overnight and failed to hold there. And in the 5-minute chart, we'll have a quick look, but like I say, if you go to the live trading section, you'll see all of the trades that that I did yesterday morning to pick up 179 points. Again, you'll see exactly as the market's trading up and down here where there was the ebbing and flowing of the market when it became oversold, overbought, oversold, overbought, and you'll see how the market just traded, and then we had a bigger move up where the market maintained the move to the upside, not closing below the 5-bar moving average. When it did, we soon became oversold, support, etc., and then moved up. And then in the afternoon, the Dow opened, we've got divergence, we've got selling, and then the market made its way down until it became oversold on the downside there. But like I say, if you want to see the details, there was 11 trades, and it's all in the member section of the website. Quick look at the currencies, if I can find them. So with Japanese yen daily, we're sitting at yesterday's low there. Let's just draw in some fibs on this just to see where we are. And you can see 78%, 89 is where we're currently at. I could see the market move down to 89% there as prices try and hold. The dollar's continuing to move higher as well. And there we go. So that's the targets you're looking for in the yen. And if you look at the 30-minute for yesterday's yen, which is this one, again, you can see that we were overbought. Market sold off. We then had the retracement after we became oversold, and then overbought again. Get your retracement in there and back down again till we're overbought, and then moving back to the DP at the moment, but looking a bit weakish there as the market's heading down on the stochastics there. In the pound, for the daily chart, we're moving lower here. So what I've done is created a weekly chart because I can't see where we are. We're at the 200 MA at the moment. Again, the dollar up on the overnight, which we'll see in just a moment. The market again, 78.89, not too dissimilar from the yen, and needs to hold at that 200 MA as it did here. If not, then we move down to 128. It'll go to 130 first, though, of course, which is the psychological level. And the 30-minute chart of the pound is here. Again, we kicked off yesterday morning with the market being overbought. Market down, oversold at the BRN, crossover, tested, market back, supply coming in. Again, you can see the retracement here is 78%, and then down we go again, and it's been sideways after showing a bit of support there, moving up slightly, but overbought and moving down at the moment. You say watch the 130 level for the pound. Right, quick look at the metals before we finish. Silver having a run. This is an unusual picture. This has not seen this since July of 2020 when the price of silver was allowed to move. And look at it go. It's moving today. We're through the 26 level. I had an order in yesterday as well when they slammed the price at lunchtime. If I just move this over, if you find silver, you'll see it had an order down at 24.99 because it was sliding down quite nicely. And I thought, well, I'll pick up just at 25, but wasn't taken. So there's not much point in keeping that one there. And we'll see what happens today, see if there's any other retracement. But you can see it's getting quite strong now. If we go into a 30-minute chart, you can see there as well. Again, they just started selling off yesterday lunchtime, and I thought, well, this is good. You know, the whole world's going to hell in a handcart, and they're selling silver off, so there's got to be a way. But what I should have done was paid more attention and used the 200 in the 30-minute. We got the divergence. Well, there hasn't true divergence, but we can see the momentum moving up. We've got a nice 89% retracement there. Okay, we've had another one overnight. Obviously a bit of selling there, but again, we've now blasted to the upside, which is very strange and uncomfortable because I'm not used to seeing them allow silver move to the upside. And there you can also see gold taking out the high, and we're at $2,000. We're over $2,000. So great to see that. Long may it continue. There you go. Look at that. At last, there was an article which I don't think I actually put on, but there's also an embargo on Russian refineries. I think there's 6 gold refineries that have been banned from sending their gold to the LBMA in London, from what I could gather. Big mistake. Big mistake. I don't mind. I'm long the metals, so it's fine by me. If you want to keep putting these embargoes in, I'll just keep taking the side of the markets that they're putting the embargoes in, because they're only going to be bullish. So there we go. That's gold as well. Dollar sideways to higher, and crude oil making its way back to that 138 as well. So again, we know what's coming, don't we? We've seen it already with the fuel prices. They were issued yesterday on in the headlines on all of the TV networks, so news networks, mainstream news. So we know anyway. Okay, that will do it for this one. I've gone on far too long, but there's a lot to cover at the moment, just to give you a background of everything that's going on. So hyperinflation is the way of getting rid of the global debt, government debt, which we've known for a long time in this channel, and now we're seeing it. The devaluation of the dollar is next, and then there will be a financial system that has to replace the existing one, whether it's backed by gold, etc. Who knows? But we are certainly living in interesting times. The end of the fiat currency from the 25th of August 1971 to the present day, where debt has been the basis of so-called economic growth, which is a complete illusion. And now the day of reckoning is upon us, and escalated, of course, by the Russian-Ukraine war. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.